My name is Lucas Sjostrom. I serve as Executive Director of Minnesota Milk, and one of our longtime largest sponsors at Minnesota Milk is Compeer Financial. And a couple weeks ago, well, probably the reason you're here is a few dairy farmers reached out and asked about ARC versus PLC and some of the other options. And so we're happy to bring this hopefully very short, straightforward webinar to you. As you'll hear, the decisions are pretty simple, but for your operation, you'll just want to make sure you know what you're doing. And with that, I'll turn it over to Karen Johnson, who works for Compeer, and let her introduce herself. Thank you, Karen, for being here today.
Yeah, thanks, Lucas. As Lucas said, I'm Karen Johnson. I am a crop insurance agent here at Compeer Financial. We're excited to be here with you today to kind of share some of our thoughts and ideas we're sharing with our crop insurance clients and producers when navigating through the ARC PLC sign-up decision for the current Farm Bill. So I think from there we'll kick it off. Again, as Lucas said, if there's any questions, either add them to the chat box and we'll address them at the end, or we will remove participants from mute so that you can voice those questions to us at that point in time.
Yeah, I think one thing as we're moving forward here, we know a lot of people have probably already made decisions, but just a reminder, and Karen will have this on the next slide here, but sign-up deadline is March 16th, so you can change any decisions by then, but hopefully this either affirms or allows you to make a decision.
So that being said, as Lucas mentioned, this is an FSA program, is not a crop insurance program. So I will begin by saying this is our opinion of the things we're looking at to analyze and consider when making that sign-up decision, but all final designation and decisions are made at the FSA office. So any questions you might have, feel free and be sure to contact your local county office as well. So we're just going to start out with some rules and regulations here. Just a reminder, the sign-up deadline is quickly approaching. March 16th is that deadline. You need to be contacting, if you haven't already, your local FSA office to get an appointment to go in and make your sign-up election and complete all the required paperwork. Quite simply, you will be selecting your ARC PLC program by county, by crop, and in some situations by farm serial number. You do have the flexibility to choose your ALC PLC election by farm serial number. We don't see a lot of producers going, making that sort of a specific decision. They'll probably stop at a by county, by crop designation, but know that by farm serial number is also an option. This time around, we are making elections for the 2019 and 2020 program years. Different than the last Farm Bill, we are not locked into these decisions for the life of the Farm Bill. It was a huge advantage and a huge win for us. We see that as producers, you have some flexibility in this program. So again, we are making a 2019 and 2020 decision because we are behind the 8 ball. In the sign up for this program, they needed to determine all the specifics of administering the program. But after the 2020 sign up, you will annually make an enrollment election for the life of the Farm Bill each fall, beginning this fall. As I said, on an annual basis. So that's a huge win for producers, as giving them more flexibility to move in and out of programs based on kind of the market conditions and what we're seeing happen out in the real world. There is penalty that exists if you're not signed up by the deadline, that March 16th deadline at your local FSA office. So we don't want to subject anyone to those penalties. So make sure you're contacting them here in short order to get an appointment. You do also, during the sign up period of time, have a one-time opportunity to update your PLC yields until September 30th. We encourage all producers to look at taking that opportunity to update yield, even though you may not choose PLC as an option, an election option on corn or soybeans or wheat. We never know when we're going to have the chance again to update those yields, so it's worth considering and investigating. Updating those yields, we're going to actually use the 2013 through 2017 yield averages. A easy way to look for this if you are currently purchasing crop insurance is referencing your crop insurance records. Again, we're updating that average yield by farm serial number. We're taking that average times a 90% discount factor, and again, a 90% discount factor. So that's what has been outlined as the parameters for updating those yields. If you have actual yields within that time period that are less than 75% of the county T yield, they will be plugged with that county T yield amount. So they're going to elevate any of those kind of disaster yields within your operation. Don't miss your chance. We want people to take this opportunity and check with your crop insurance agent for a yield report. Many crop insurance providers have a outlined report by farm serial number by crop that can easily be used to identify what those actual yields are by farm serial number. So jumping right in here, we're going to identify or outline what these two programs, what they entail, kind of defining the parameters. First of all, the agricultural risk coverage, or the ARC product, is the revenue on that product is calculated by multiplying the actual average county yield by the higher of the marketing year average price or the national loan rate of the covered commodity. ARC payments are triggered when that ARC county actual crop revenue is less than the county guarantee for the year. Payments are made at 85% of your base acres as defined at FSA for that ARC county product. If you are choosing ARC individual, and we'll talk about that a little further here in a minute, that base acre allocation or percentage is 65% of the ARC individual, or the ARC acres at FSA, or base acres at FSA. The other win to this second phase of this Farm Bill program that we see is that yields used to drive those annual ARC county guarantees will be trend adjusted, and they will be used based on collected RMA data. So no longer, you might remember the last Farm Bill used NASS data to determine what that county yield was in that calculation. So we were sort of at the mercy of whoever was turning in those NASS responses or taking those phone calls when NASS called to investigate with producers what county production harvested really was. Now we're truly using RMA data, as 95% of producers participate in a crop insurance program. The government has a pretty clear understanding what those numbers, county average or county yields are. So therefore, we're feeling like that's a much more accurate number than what we've used in the past. And as I said earlier, those numbers are trend adjusted. So the government's accounting for the fact that yields are getting better over time, and they're acknowledging that there is an elevated or an increasing yield occurring out in the countryside. If producers chose ARC as their chosen election for the crop, they're not eligible to buy SCO, and we'll talk about SCO, or supplemental coverage option, further in a later slide. But know that ARC no longer allows you to participate or buy SCO. So really, to boil it down, if you're concerned about yield or disaster related to yield within the county, choose ARC.
Karen, in other words, if you're worried about yield going down for any reason, most likely weather,
correct,
you should choose ARC, especially more concerned about yield than you are price.
Correct. Yep. As I had stated earlier, producers that had some sort of a 2019 catastrophic event happen on their farm, specifically by farm serial number, or had some sort of 100% prevent plant situation, may want to consider that ARC individual product, but it really takes additional analysis to really vet through that to determine which is a better option for you. So be having further conversation. We are with your crop insurance agent, with some of your trusted advisors to make that decision. We have some tools available at Compeer here that help make some of those decisions as to which might be a better option. But if you harvested any sort of a crop off of your farm last year, ARC count, and you choose ARC, ARC County is probably the better option to choose. All right, so flipping the coin here a little bit, your other side or your other option converts to ARC is PLC, or price loss coverage. As defined, the payment is made on PLC when the effective price is less than the effective actual price is less than the reference price. Those reference prices have been defined. They are $3.70 on corn, $8.40 on soybeans, and $5.50 on wheat. The PLC payment calculation simply is the effective reference price less the effective actual price times the payment yield as determined on your FSA paperwork, on your PLC paperwork at FSA, times 85% of your base acre allocation. The effective price specifically is that national average or local cash price in the months following harvest, specifically from September 1 to August 31st the following calendar year. So no longer, we're not talking about a Chicago Board of Trade price, we're talking about a local cash price on a national average. Now the part we don't exactly know and RMA won't tell us, or they will not be telling us, is if that average price will be weighted more heavily in the upper Midwest, where the balance of corn and soybean acres are actually grown, or will it be truly as opposed to the Southeast or the Southwest, or will it truly be a national average price? They black box that number a little bit. We don't have all they get to keep that information specific to them. We don't get all the details, but know that we're using a local cash price. PLC yields, as I stated earlier, must be updated by September 30th of this year. Even if you're not choosing ARC, again, take the opportunity to update those PLC yields, because we don't know if switching to a PLC product, although if it's not your choice today, it might be a choice for you in the 21 through 23 crop years or growing seasons. Payment is made at 85% of your base acres. And quite simply, if you're concerned about commodity price and commodity price falling specifically below those reference price listed on that first bullet point, choose PLC.
So Karen, would it be fair to say if you think corn is going to be below 370 and you're more worried about that than your corn yield's not hitting average, you'd choose PLC, and the same for soybeans and wheat. If you're more worried about them being below those 840 and 550 reference prices than you are about losing yield to a point that is below average, PLC would make more sense for you. Is that a fair way to restate that?
Yeah, yep, absolutely, Lucas. And we believe, we haven't seen all the yield numbers as reported by producers, because again, we're going to use this RMA yields. We don't exactly know where that yield number is going to fall, but in general, producers who were able to get corn in the ground last year had surprisingly good corn yields. I think price, when it comes to corn specifically, is going to be a tougher struggle, both in the remainder of the 2019 marketing year and the 2020 marketing year, as opposed to growing a yielding, respectable yielding crop. So that is definitely all true in our recommendation.
Thank you.
So I had spoken about referenced earlier, SCO, or supplemental coverage option. SCO is a complementary product only available when you purchase PLC, or excuse me, when you elect PLC on your farm election or your crop election at FSA. SCO is not a new product. It was available during the last farm bill, but because generally most producers chose ARC on both corn and soybeans, because 2014 had such a good opportunity for collecting, PLC was sort of off the table. And remember, we locked in our ARC PLC choice for the life of the farm bill. Now that PLC might be something producers are going to consider, we also want to make sure you understand about what SCO is. SCO is available for purchase on top of your existing multi-peril policy from your existing crop insurance agent. It's an endorsement to add to your policy, which must be added by the March 15th crop insurance sign-up deadline, which again is quickly approaching, the 16th this year, because the 15th is on a Sunday. It's only available again if you're electing PLC on the crop specific crop. It provides area-based coverage above the producer's underlying multi-peril coverage up to 86%. Why this might be interesting for producers is the fact that it's actually paid on planted acres, where you might remember PLC election was only 85% of your base acres as calculated at FSA. So you can carry this on every single acre that you're growing in the 2020 crop year, not just the base acres at FSA. It's subsidized at 65%, so that additional band of coverage is highly subsidized. But again, it's based on the county average, not the producer's average anymore. So that band of coverage is determined, or we look at whether or not the county experiences a loss before we trigger a payment. It's really best fit for operations where yields track with the county average. And again, you should be quizzing your crop insurance agent or your trusted advisors to help you understand whether or not you're moving in a way that's highly correlated with the county, if your yields are, or if they're not. If they're not moving, a yield-based or a county-based product a yield-based product based on county is not a right fit for you.
So Karen, if you go to your FSA office and you signed up or are about to sign up for PLC, then you turn basically to your crop insurance agent if you wanted this supplemental coverage option. Is that right? That's
correct. And it is an endorsement, again, that needs to be added by March 15th.
Got it. Thank you.
So kind of to wrap this all up, some final thoughts for you today. Make sure you're completing that ARC PLC sign up at your local FSA office by March 16th. Again, I should have corrected that dating. It filed as March 15th. Since that is a Sunday, you have until the 16th. We want to make sure you're updating all your PLC yields on crops with base acres as certified at FSA by September 30th of this year, whether you're choosing PLC or ARC. Don't miss that opportunity. And contact your insurance agent before March 16th of this crop insurance sign-up period if PLC is chosen on corn, soybeans, or wheat to determine if SCO makes sense for your operation. We don't want to miss that opportunity if it's something you wanted to elect. And really know which program you're choosing and why. Become educated, ask those tough questions to your agent and your trusted advisors to make sure you understand the choice you are making for this 2019-2020 sign-up year, and be ready this fall to re-inspect and readdress whether or not making a change in those elections is right for you on an annual basis for the life of the rest of the Farm Bill. If you do have further questions, we are here to help. My contact information here is on this slide. We also have some really good resources at compeer.com. We have some analysis tools that are available for producers to help make that ARC PLC decision and also help analyze if SCO is a good option. The other thing I would offer is that we have, if you are regularly listening to podcasts or if that's something interesting to you, we do publish a regular crop talk podcast that covers all things related to crop insurance and Farm Bill and risk management in reference to our opinions and our thoughts about what producers should be asking, what they should be looking for. So search for that in your local podcast app as well.
Well, thanks so much, Karen. And so, to maybe simply answer questions, restating what you said another way, let's go and put it all on you and pretend that you're a crop farmer, Karen. First of all, I guess, does it matter if I am, let's say, 25% corn versus soybeans versus wheat versus alfalfa? If I was 25% all four versus, let's say, 50% corn, alfalfa, would that change your decision? And knowing what the current prices are, what would your decision be?
Yeah, so the mix or the allocation of crops in your operation doesn't really weigh, in my opinion, as to which program sign up would be best fit. Because of what we're seeing in current market conditions and because what we're hearing about anticipated acres being planted for 2020, I really believe, and our recommendation is that PLC is a best fit for most corn produce or when it comes to making corn election. We really think that price is a bigger risk than yield when it comes to growing corn. ARC is probably a better fit for soybeans, is our recommendation. Again, back to those reference prices, $8.40 on soybeans is going to be a tougher, in my opinion, price to break versus $3.70 local price on corn. So those are my recommendations. Small grains, including wheat, also PLC is the election I would follow. And just a recommendation that alfalfa is not identified crop in this Farm Bill sign-up program, so no option for sign up on that commodity when it comes to alfalfa.
Thank you. So as we said, hopefully pretty straightforward, but we'll take any questions, and I'll just say in the background, Karen and I were just chatting about on terms of alfalfa, just how to improve products there to better have some more risk, especially with winter kill and the much higher quality alfalfa than we had just 15 years ago. It's something that Minnesota Milk is working on, and something I know Compeer are working on. Sounds like we've opened up the network for questions, so everybody's mics are live. Are there any questions? Well, hearing none and hearing some background noise, any final thoughts from you, Karen? Otherwise, ask your question quickly or we'll sign off.
No, Lucas, thanks for your time today. I encourage you to, again, ask the questions of your trusted advisors. Feel free to reach out to your local Compeer agent if you had any questions we might be able to help you out with as well. Thanks, Lucas.
Thanks, Karen. Have a great day, everyone.